in this crazy seller's market, should you just wait till things simmer down to make your move? Well, we have to look at what's driving this situation. Home prices have been going up for almost 10 years now. This past year, we've seen double-digit inflation. How long can this continue? To answer that question, we have to look at what's driving it. So the main thing is the millennial generation is in the life stage where they're buying homes. They're in their mid-20s to upper 30s, and that's prime time for home buyers. And their generation is bigger than the baby boomers. So that's a huge chunk of demand. And interest rates are so low, and people are moving about the country. They've seen that they need a certain type of house during the pandemic. They've reevaluated their housing needs, so that's prompted a lot of moves. So the government has been printing money just as fast as it can, so that's been stimulating consumption and growth, but at what price? I think we're going to see inflation as a whole on all products and services get out of hand in the midterm. But in the short term, there's really no indication that home prices will correct. And if we do see any kind of shift, I don't think it's going to be like 2008 when anybody that could fog a mirror could get a home loan, and people use their homes as ATMs with cash out refis. And now today people are sitting on a mound of equity, so they're gonna fight tooth and nail. They're not gonna just throw up their hands like they did in 2008, 9, 10, 11. They're gonna take a second and third job and do what's necessary to keep their house as long as they possibly can. And with the housing shortage, people that do run into hard times will be able to easily sell their home. There's so many programs. If their house needs work, they can get money to fix up the house and pay it at closing. So there's a lot of options that people have these days that they didn't have in 2008. So during the height of the pandemic, there were over 4 million deferments on mortgages, and people think once those start to expire, we're going to have a big foreclosure crisis. It's not going to happen because all these deferments were not taken out in the same month. The government's been allowing 6-month, a year, even 18-month deferments. So they're not all going to flood the market at the same time. A lot of the deferments have already exited the program and got their houses back in order. So the current number's around 2.5 million homeowners that are still in deferment. The housing shortage will absorb that as they trickle in to the market. Builders just cannot build homes fast enough. Supply chain issues through the pandemic have not been corrected, and industries that had thin margins and increase their prices as their supply issues get worked out, they're not going to pass those savings along to the consumer because now we've been conditioned to think that $300,000 is a starter home, and that's going to continue. So there's no relief in sight for the buyer. And Georgia, in particular, remains a attractive location for people fleeing high tax states and overregulated states. And Georgia has a good economic and political environment for people that are looking for jobs. There's plenty of employment opportunities in Georgia, and we have a diverse economy. So, we're certainly no one-trick pony. Okay, so I don't have a crystal ball, but you can reasonably expect home prices to continue, maybe not with double-digit price increases year over year, but maybe we'll continue. I mean, there's no way of telling. But if a $300,000 home is next year worth $330,000, you have to think about what that does to your purchasing power. Also, the interest rates are very low right now. They're 3%, and I don't see it staying that low. With the government printing so much money, they're going to have to do something to try to control inflation. So, they're not going to let interest rates lurch, because that would be very destructive to our economy. But I could definitely see interest rates drifting up slowly. So, it wouldn't be unreasonable in a year's time to see the interest rates go from 3% up to 3.5. So get on a mortgage calculator. Just Google mortgage calculator and pick one that looks good for you. I found that NerdWallet seems to be a pretty simple mortgage calculator to work. I don't have any affiliation with them, but that's a good resource. And just play with the numbers as far as the price of the house, how much you put down, and the interest rate, and see what that does with the monthly payment. So I've been speaking with potential buyers. The past 5-6 years, they've been saying, some people have been saying they're just going to wait out the market, and it hasn't worked out too well for them. So don't try to time the market. If you need to move.